education begins, let's remind everybody, bien, Credel. It's nice to see you. Guys, remember this is an education room. The goal of the room isn't to tell you when to make decisions, guys, but rather give you the ability to recognize advantages so that you can make your own decisions. You can make your own informed choices about entering and exiting the market. This is not a call your shots room. This is not a hey, here's your signal, get it done room, guys. This is a room that's dedicated to education and teaching you to read these T3 indicators so that you can use them to your advantage. That's my little disclaimer. Have to do it every day. Um, for the lawyers, right? And then before we do anything, I always go to forexfactory.com/calendar, guys. This is my first stop every morning because there's nothing worse than getting into a trade and you're super excited and all the advantages are there. And then news releases and it spikes 500 points the other direction. You get slipped, you're angry. Um, Everything that's taught in this room is really a pattern. It's the market doing the same thing because the market always does the same thing. So anytime there's high impact news, USD high impact news, guys, it can disrupt your pattern. That's the easiest way to think about it. I need a market that loves to repeat itself, and when news is released, it may not do that. I choose to sit out. If you're a Nexgen Pro Trader funding, you are in a forced sidelines. You're not allowed to trade news because of the volatility that it can create. The whole classroom is designed to teach you to read your indicators. So, Matt, um, we're not looking for trades, and this is so important. We're looking for advantages. So, if you're new in my room, change your mindset a little bit, embrace the verbiage. I'm not looking for a trade. I'm looking for advantages, and I will turn those advantages into my trade. What I teach here, guys, I'm going to give you a checklist. It's only going to have 3 rules. It'll have 2 charts, and then we're going to focus on advantages individually, and then those individual advantages become your trade. Doing nothing. I call it chart reading because it sounds better than sitting on your hands and not doing a darn thing. Chart reading is about 90% of your day, guys. There's a lot of sitting still and a lot of doing nothing and a lot of patience. And the more confident you are in the edge that your rules provide, the easier patience becomes. If you're chasing money, you're going to see every tick as a missed opportunity. It becomes easy to chase. But when you're really focused on those advantages, um, that 90% is like this is where the money, I won't say made because you're inactive, but this is where the avoidable losses don't happen. This is where trading into trouble doesn't happen. This is where jumping in relying on hope just can't happen if you're not in the market, guys. You're going to understand through your chart reading where the market is likely to continue, likely to go, and likely to stop. So when we say likely to continue, we're talking about a very specific point. And this is the point where an already established trend that maybe has had a little bounce or a fluctuation is likely to bounce and just continue with that trend. You're going to use those for entries. Where the market is likely to go. Now, this is where you're going to be able to look at your charts and say, okay, with these advantages, that line off in the distance is going to be a fantastic target. And then where the market is likely to stop. So we call these termination conditions. Anytime you hear price has reached a termination condition, it means that price has made it to a line, and that line follows a simple recipe to be described as a place that could stop or reverse the market. So that's going to be your 90%. You're going to see these lines before the market ever gets there. And with a little bit of study, you're going to learn to trust them. Now, if you're new to trading, this is what the market does. The market creates a trend, either up or down. It doesn't matter. This is futures. We can make it both directions. Here, watch this. Let me pull this one in. Same picture, different verbiage. This is the recipe for success, guys. Let the market establish a trend because everything that I teach in this room is a trend trade. It says, hey, everybody that runs the market has already told us it's going up. Hey, good morning, Sergio. And then there's typically a fight. And then the market seems to resume the trend. What's taught in this room is pinpointing right where that fight is most likely to be lost. Now that's where the market is likely to continue. You'll use areas in the distance for targets. That's where the market is likely to go. And when you hit those areas, if the recipe is true, you'll simply sit on your hands and wait for the next trade. So the market goes up or down. There it is going up. There's your fight. Or down. Here it is on TradingView. There's your trend. There's your fight. There's your resumption. So there are three things that you can do in the market. I love this phrase. You can buy the market if you're trend trading to go with it when the market is going up. You can sell the market if the market is going down and you're a trend trader, or you can wait because you don't have an advantage. So it's either buy, sell, or wait, guys. It's not always throttle or gap or throttle or brakes. What we're going to do this morning is the same thing that we do every morning, guys. I'm going to give you rules. Whether it is NinjaTrader, whether it's TradingView, I'm going to give you rules. So Matt, you've chosen TradingView. It's going to be hard, but tune out NinjaTrader. Don't even worry about it. Guys, the difference between TradingView and NinjaTrader is apples and oranges. While the methodology is the same, the charts are different. Yeah, man, the software gives you everything. All you have to do is read them. So NinjaTrader uses dynamic Renko bars. It's a much faster environment, and it does have Fibonacci. TradingView uses minute bars, but the methodology is the same, guys. Create a trend, let there be a fight, pinpoint the fight. And once you get good at this, you find yourself pretty patient. So I'm going to hand you rules for both. Now here's the one, simulate, practice. Matt, do you have a way to capture pictures? Do you have Snagit? Do you have Microsoft Snipping Tool? Do you have something that you can capture a picture and get it into my room with what you see? Because if you don't, I need you to do that because that's how we have conversations. We try to avoid, we try to avoid the chat box because it means that I have to go back and forth, back and forth, back and forth. So what you'll be able to do is you'll be able to post in my room. Let me find a picture of a posted chart. There we go. And you're going to be able to tell me exactly what you saw and exactly where you saw it and how you read your indicators and what they meant to you. And if you post that in the room, it's like a private session, guys. Now, there's a lot of people in this world that have had private sessions with me, and I would say 95% of them are all sorts of bummed out that I don't say anything different outside of the room than I say in the room, guys. I will give you everything that you need to be successful with the software, but you've got to practice it. You've got to post it. You've got to ask questions, and try not to practice the wrong trades. And when I say try not to, you're going to make mistakes. That's not practicing the wrong trades. Mistakes are learning opportunities. It's when you say, I know none of my rules are met, I'm going to jump in anyway and see what happens. Guys, if it wins, your brain doesn't know that you're doing risky stuff, and those short-term victories very often turn into long-term failures. So practice, practice, practice. Post in the room. If you look at a chart, and guys, this is, I'm telling you right now, if you look at a chart, you open it up, and you take a picture, and you say, hey, Mark, what's going on here? We'll talk about it. Hey, Mark, what happened up here? Why did the market reverse? We'll talk about it. Is that area still a problem, Mark? We'll talk about it. Everything. The only people that don't get help in my room are the people that don't post. So build that habit from day one. Being active. Make it a discussion, not a lecture. The second thing is keep it simple. The plans that I give, and they've already been dropped in the room. I can drop them again if you need me to. I give you a KISS plan for NinjaTrader, and I give you a KISS plan for TradingView. Good morning, Miss Trina. Happy Monday. Now, here's the deal, guys. These plans are stepping stones in your learning journey. This is like the very beginning, the foundation, the best of the best, the highest probability. And they're designed to teach you to read your indicators, to recognize advantages, to get to the point to where you stop saying, is this a trade, but rather saying, this is my trade, because I know that this is my pattern, and I know that this pattern creates an edge. The plan is designed to optimize your chances of success, which means that out of a million combinations and ways to use the software, this is the highest probability. This is the one that creates confidence through that memory of success. And it'll be through study, simulation, class feedback, and practice, you're going to write a plan that suits your needs. So if you are in TradingView, I want you to see something. I think I need to lose the basic workspace. I can get that to you. It tells you the 2 time frames that you're using. It gives you a picture on how to read your 15-minute chart. So you've got to learn this. It shows you exactly what it looks like to enter a trend trade. It gives you a checklist to make sure that you're entering the correct trend trade, tells you where to put your stops, and gives you a couple pictures. And then it introduces you to the second trade, which is a momentum trade. Guys, everything that I teach in this room is a pattern. And I'm not sure how old you are, Matt, but think of a video game. 45. So think of a video game where if you just knew the pattern, you never died. Does that ring a bell? I don't know if 45's there. I got you by 8 years. We used to go play Galaga, and 1/4, there was a pattern where you could make them stop shooting at you. There was a pattern in Pac-Man where the ghost wouldn't get you. And guys, as long as you stuck to that pattern, you were more likely to win than lose. And you would make a mistake every now and then and get eaten or shot. But for the most part, it created an edge or an advantage, and you leaned on that advantage so you could get the most out of your quarter. That's very much what trading is like. You've got to know what those patterns look like. You've got to learn to commit to those patterns. And if you do that, what happens is the market literally slows down. You will call your shots. So the path to getting to where you want to be, ASAFP, it starts with posting in the room, guys. This is a discussion, not a lecture. The second thing is know the patterns, learn the patterns. That's where the other gift that I gave you is. So for NinjaTrader, there's your 3 rules that create a trade. There's like 450 pictures of clients posting that pattern in the room. You can use these to study, to look at it and say, oh my gosh, the one from 2021 looks just like the one from 2025. It's just a pattern. There's ideas on management, more patterns that you'll see outside of the very core pattern. There's a place for you to put your pictures, and there's a trade tracking sheet. Now, the trade tracking sheet is what they say is the second most important thing you can do to become a confident trader ASAP. Every time you post in my room, you're going to get feedback. Promise. Nobody's ever posted and not gotten it unless I missed it on accident. They didn't tell me. Guys, so you're going to have your picture. You can talk about the advantages, and we'll talk about these. But most importantly, there's a place for feedback in the room. If you wake up every morning, and guys, this is the first thing I do. Well, I usually finish my day with it. If you wake up every morning and you open up that spreadsheet and you look at those pictures and you read your annotation, but then you read the annotation that is the feedback from class, guys, you're going to start asking yourself what worked and what didn't work and what felt easy and what felt forced. And what you're going to find is that when you're following your rules, you seem to be finding this amazing success. And when you're breaking your rules, typically it creates challenges. So the tracking sheet, the feedback, it's going to show you those challenges. It's going to let you know what your thing is, the thing that may be holding you back from where it is you want to be. Guys, lean on this, because once you know what's wrong, like no areas inside of triggers, that's an entry rule being broken. You can put a giant note on your desk that says, hey, when you enter this trade, make sure you're in triggers, or make sure that you have momentum, or don't trade into lines you keep losing when you do it, guys. And what you do is you set yourself up for the day. I'm going to focus on these great things, and I'm going to focus on missing these horrible things that are taking my money. If you do that drill every day, you will absolutely be floored at just how quickly you get to where you want to be. One more disclaimer. I teach the high probability trend trade entries. There's a million things to see and do outside of these entries, guys, and they will confuse the ever-loving snot out of you. So if you are a brand new user, I want you to focus on simplicity. It's only 3 rules. Learn them individually. Know what it looks like to have a rule true, because every time one is true, it creates an advantage. It's the 3 advantages that are the recipe for a trade. So rule number 1 provides momentum. So anytime you hear me say this market has the advantage of momentum, this is a market that is pushing, that is going to be difficult to stop, that is deep into that trend and making good things happen in the direction. Momentum is like a freight train. Clear path means that there's none of those lines in the way that could create a bounce. No fibs, no one-to-ones, nothing that could disrupt your good time and slow that momentum down. Now, these first two advantages should look like this in your head. I love this picture. Momentum drives the market, can break areas, pushes things. Looks like this guy. Nobody's stepping in front of this. And then path. It's just a straight shot till you hit something solid. When you learn these two concepts, and on TradingView, it's more like direction and path. When you learn these two concepts, it opens the door for more trades, for more opportunities, for different management. But until you learn them individually, you're not going to be able to piece them together to make a trade. So keep it very simple in the beginning: momentum, path, and entry. Everything that you do with the software, I kid you not, we'll go back to that. It only takes 2 charts to recognize these 3 rules as true in time to enter a trade. Everything begins on a large chart. It's a slow chart, guys. It's a very broad stroke of a brush. And it shows the overall opinion of the market. It takes 1 bar, the most current bar, on your large chart, will define the direction that the trend is going so that you can make the great choice to trade in that direction. It'll define the momentum of the move, letting you know that rule number 1 is or is not met. And it will define the areas that could stop the market and the areas that are no longer a problem. Guys, rules 1 and 2 are met on 1 bar on the large chart. And when they're true, the market is trading what looks like it's running away from you. We go define our entry where the market is most likely to continue, where your trend trade originates, on a smaller, faster chart. This is a refinement chart. And inside of this 1 bar, from bottom to top, you'll typically see the fight. That's called a retracement. It's a small move counter to the underlying trend. So downtrend, up move. It'll show you where the market is most likely to bounce and continue in the direction of that trend. And if this is one of those winners, it'll show you the continuation in the direction of that trend. And all of this happens inside of this 1 bar. Now, by using the smaller, faster chart, you're going to be able to reduce risk. You're going to be able to increase profit potential. But the small chart is never addressed until the large chart says it's time to go look for your entry. Why? Because we're not in control. You're not in control. I'm not in control. My 2 lot, 4 lot, 10 lot has absolutely nothing to do with what the market is going to do. The market doesn't know I exist, nor do they care. The large crowd is your big chart, guys. These are the men and women with the money and the influence to create trends, to establish momentum, and they react at key areas. And the large crowd wins more than they lose. That's why they're the large crowd. Your small chart is the small crowd, and they still have more money and power than you'll ever have. And guys, they create that fight. They're fighters, ne'er-do-wellers, if you will. Rule number 3 is designed to show you right where the small crowd is most likely to lose that fight. When the large chart rules are met, they lose that fight typically 70 to 80% of the time, which means that when you have momentum, when your path is clear, when you define where their fight is most likely to be lost, this high probability trend trade gives you the potential to win about 70 to 80% of your trades. That's what we're doing. That's an edge. And then we let probabilities take care of the rest. Areas on NinjaTrader. This is the first indicator lesson. Areas, really which platform, doesn't matter. Areas can create a bounce. Areas are bouncy. Horizontal lines on your chart can stop forward progress, can retard forward progress, can create untradeable bounces. Guys, areas have names. Divergence highs. Anytime you see a magenta line coming off of a pivot, it means that the market went up and down, and your software said, hey, they're losing momentum. And from a low, it's cyan. If you're from the 80s, it's hot pink and baby blue. You're going to see Fibonacci resistance. It's a red line. You're going to see Fibonacci support. That's a blue line. You're going to see yellow 1-to-1s. These are fibs in the moment. And then you'll see a mid-band. And now here's kind of an easier way to remember it. If the market is in an uptrend, any line, whether it's a divergence high, whether it's Fibonacci resistance, whether it's a yellow 1-to-1. In an uptrend, any line that is hit, we can call resistance. Just blanket term it. It takes the pressure off. And in a downtrend, if it hits a divergence low, if it hits, well, I'm trying to get them all together here, a yellow 1-to-1, if it hits Fibonacci support, we can blanket term it. In a downtrend, a line that is reached is an area of support. So you're going to hear price reaches resistance, price reaches support. Guys, they're all equally important, and they all have names. On the large chart, they'll define termination conditions. On the small chart, we're going to use these bouncy areas to define entry. But trigger lines are the magical beast. Trigger lines do the heavy lifting. Trigger lines are two sets. There's small triggers. Two solid lines work together to create the small triggers. They are a fast-moving average. And two dashed lines create the large triggers. They're a slow-moving average, tortoise and the hare. When they're green, they're up. When they're red, they're down. You'll use trigger lines, NinjaTrader users, to define momentum in rule number 1. You will compare these trigger lines to those areas on a large chart, and that's going to have you defining rule number 2, making sure you're not trading into an area that could stop the market. And then you're also going to use the large trigger lines on the smaller, faster chart to define your perfect entry. Trigger lines show up in each and every rule. I'm going to say it one more time. Learn how to define the rules individually and then piece them together to create that amazing pattern that you can prove wins more than it loses. So the large chart, well, let me do this. Any questions before I get breaking down the rules? We're gonna do them one by one. Visually, we'll look at them in the live market. And what I'm really gonna do, hey, good morning, Wayne, is I'm a language nerd. For those of you that aren't in here, I'm gonna give you phrases so that you can create this correlation between what your eyes see and what your brain needs to think. But we're gonna start with rule number 1. Large chart must have strong trigger lines because we are dependent on the advantage of momentum. Here's your large chart. If the background is green, we're in an uptrend. If the background is red, we're in a downtrend. If you're taking a trend trade, it's pretty imperative that you're trading with the trend. In an uptrend, when the background is green, it's equally important that both small and large triggers are green, or in a downtrend, both small and large triggers are red. If the colors don't match one another or the background, rule number 1 is not met. That's your cheat code. So to have strong triggers, and remember, this is the first bar, the most current printing bar. So let's do this. Let's put it on the first bar. If you look at your large chart and the background is green, your small triggers must break above and away from the large triggers. And my phrase is separation is strength. Your large triggers must be wide and angled in the direction of the trend. But this look right here lets me know that the odds are favorable for the market to continue up. And in a downtrend, when everything is red, going to your most current bar, the small triggers are below the large triggers are wide. It's the space between that lets me know that the odds are favorable for the market to continue down. So every time you hear the phrase odds favorable momentum, it means that your large chart is showing you like open scissors, and that space is what creates the advantage. And the advantage is a market that's going to be hard to stop. The advantage is a market that has the potential to break areas. The advantage is a market that even covers up some of the mistakes that we make as new users. So if separation is strength, when there is no separation, when your scissors close, when you can no longer see daylight between the small and large triggers, guys, your advantage is gone. We call this weak triggers. And with weak triggers, anything can happen up or down. So you go from the odds are favorable for the trend to continue to anything can happen up or down. And there's going to be this magical moment in your life where you say, well, I don't want to risk my money if anything could happen. I want an edge. I want a market that's hard to stop. I want a market with the potential to break areas. And it's my right as a trader to demand that momentum. Now, guys, give me a Y if you see it in the room. This is our most current bar. The small triggers are inside of the large triggers. There is no space between the two. That ran out all the way back here. This is what we call weak triggers. And when I have weak triggers, anything can happen up or down. The advantage of momentum, from the moment there's the smallest amount of space until the moment that space goes away. Somewhere in here, there may have been opportunities to find that fight, to take that trade. Guys, momentum is rule number one for a reason. Is everybody good with that? And currently in the market, we simply don't have it. And if I go to crude oil, let me go to crude oil real quick. I like using the large market. There we go. Smalls are up, but the large are down. The colors don't match. I don't have momentum. Does that make sense, everybody? It's almost too easy. Momentum either is or is not. Don't overthink it. Let it be that simple. I either have the advantage of momentum because my triggers are strong, or my triggers are not strong and I don't have the advantage of momentum. And guys, this is a flow chart. If you don't have rule number one met as a brand new user, who cares about the other two rules? There's just no reason to go look for it, not until you understand the three basics. And then that opens doors. That opens doors for more. So rule number one, guys, strong triggers. Strong triggers is awesome right up until you hit a termination condition. And a termination condition is a Fibonacci-based indicator with the potential to reverse the market. That's the textbook phrase. You guys want the easy phrase? Horizontal lines on the large chart can stop a market, can create a bounce, could break. Horizontal lines on the large chart are where the large crowd are making decisions. If you reach a horizontal line on a large chart, regardless of the name, that's an area that could behave as a termination condition. You're going to see it before you ever get there, and there's a very simple recipe to define it as a termination condition. And it starts with letting the large crowd get there. Let price reach the area. Dynamic Renko bars hit Fibonacci resistance, divergence high, yellow 1-to-1. Price bars reach support, any of the three. All you have to do is ask yourself, where are my triggers? Well, if all four trigger lines, small and large, remain below the area of resistance, that area of resistance is a termination condition. And if all four trigger lines reach Fibonacci or stay above Fibonacci support, yellow 1-to-1s, divergence high, that area of support is a termination condition. And if it is a termination condition, rule number two says absolutely no trades into that area. Don't initiate a trade right here, hoping the area breaks. Don't get into the market right here, hoping the area breaks. It's better to wait for the reaction. That's where the edge comes in, because this area could break. This area could just stop the market dead in its tracks and reverse it, or it could create this crazy seismograph fight between the buyers and sellers as they jockey for position. And guys, you will never know. You'll never know what the market's going to do. But the cool thing is you don't have to know what the market's going to do to make money in the market. So if price reaches the area, we're done with price. And if none of the triggers break, we choose to do absolutely nothing, to sit on our hands, to wait for the reaction. Guys, rule number two is the most broken rule. But if you look right here in crude oil, where price reached Fibonacci support, the triggers didn't break. Does everybody see the reversal happening in the moment? Pretty cool, right? You knew about that line for hours. Up top, I love this. Price reaches a divergence high. Absolutely no triggers break. That's where the reversal comes from. Divergence high, Fibonacci support, Fibonacci resistance, Fibonacci support. I can't make this up, guys. I am literally scrolling back in crude oil. Rule number two lets you know where decisions are most likely to be made. Your trigger lines will tell you the most probable outcome in that decision. Is everybody good with that? Give me a Y if you're okay. Price reaches, where are my triggers? And remember this phrase, no triggers, no trade. So if it doesn't bounce, If it doesn't reverse, it means that it's breaking. This is what it looks like when it breaks. First, it reaches Fibonacci support, and when it does, I ask myself out loud, where are my triggers? And all four of them are still above support. In the moment, every line you reach is going to be a termination condition. Now, if you're already in a short trade, you may choose to see if it breaks. But if you're not in a short trade yet, your highest chance of success, that longevity, comes from just waiting for the reaction. Now, if it's really going to break, trigger lines tell the story. Once price gets there, I'm done with price. So we lean on the trigger lines. If two of my trigger lines, it'll be the small, break through the area with momentum, because rule number one's in play, but two of my trigger lines remain above, 50% below, 50% above. Now this is what we call a 50-50 look, and it means that with all of that momentum, this area has the potential to break. You can take trades based on that potential, but they must be managed assertively because two triggers doesn't guarantee a break. And the plan that I give you, it says wait for at least 3 triggers to be through before you try to trade that potential, designed to optimize your chances of success. But even 3 triggers doesn't guarantee a break. It's only potential. It must be managed assertively. The majority of your trades, NinjaTrader users, will be this 50-50 trade. It's when all 4 trigger lines, 1, 2, 3, 4 lines, get below Fibonacci support that we consider Fibonacci support to no longer be relevant. It's in the rear view mirror. It is broken. My path is clear. Support will actually behave as resistance. And guys, your path is clear now. Rule number 2 is met 100% until you reach the next area. And once you reach the next area, you go right back to number 1. So to define a termination condition, it's all triggers. It starts with price reaches an area. That's your phrase. Where are my triggers? No triggers, no trade. It could reverse the market. It could create a bounce. It could upset the apple cart. If 2 of the 4 triggers break through with momentum, it does have the potential to break. This is not your best look. This is not a likely scenario for a breakout. So your plan says wait for 3 of the 4 trigger lines, both small, 1 large, to get above resistance. Still yellow. It's in the caution stage. My path isn't clear yet, but there's a lot of opportunity here. I have to manage assertively. But once 4 triggers get above that fib, 1, 2, 3, 4, I have momentum. Guys, I am chomping at the bit to go find an entry. That's my best of the best look. So let's look again and just see. Momentum breaks, momentum breaks, momentum breaks. As we begin to lose momentum, Fibonacci holds. There's your reversal. Price reaches Fibonacci resistance. 1, 2, 3, 4 triggers are below that area. Absolutely no trades into that area if you're following the plan. Let's see if we can find some of that potential. Only 2 triggers through, and it doesn't break. Only 2 triggers through, and it doesn't break. Let's see. 3 triggers through, didn't break. 2 triggers through, didn't break. No triggers through, reverse that market like it was getting paid to do it. Pretty cool, right? 2 triggers through, only the potential. You have a plan. Guys, all you have to do is count triggers. It'll tell you the entire story, everything that you need to know. The hardest thing you'll ever do is sitting on your hands until it's perfect, which brings me to my next point. There will be times when your rules aren't met. There will be times when your path isn't clear because of stacked areas. There will be times where you don't have the momentum that you need to say rule number 1 is met. Guys, this is 90% of your day. And 90% of your day is spent doing nothing, but that's okay. The futures markets trade, on average, $220 billion hourly. The S&P, which is where most of you end up, is trading about 174 million every day. The NASDAQ exchange is about 270. It takes $400 over the course of the average trading year, 250 days, 252 days, to put you in a 6-figure income based on your trading. Now guys, $400 doesn't feel like a lot of money until you look at it over the course of the year. So new users want to be in every move. They want every tick. They want every bounce. Guys, it's not necessary. And if you keep it focused and you follow a plan and you have an edge, you'll find that that $400, $500, $600, $700 a day isn't really nearly as lofty as you thought it was in the beginning. So focus on the edge. Rule number 1, need strong trigger lines. Separation is strength. Everybody good? Gives us the advantage of the momentum. Momentum's going to be difficult to stop. Rule number 2 says nothing in the way that could create a bounce. Room to profit targets. Let's call it a clear path. Guys, when these two are in play, we're going to go define our entry. We're going to go pinpoint where the fight is most likely to be lost. And then once again, language is key here, guys. Your entry is so good that you're going to use a limit order, a Ninja Trader. And you're going to buy or sell a pullback. That small push against the large chart, that's going to begin with a reversal bar. You're going to do it at an area because areas are bouncy. Fibs, mid-bands, yellow 1-to-1s. And that area must be inside of those large triggers because large triggers will show you precisely where your entry is coming from at that area. And it's just a pattern. So when the large chart is up, we choose to go up with it. When the large chart has momentum, it's going to be very difficult to stop. When the large chart has a clear path, there's nothing in the way to create a bounce. And that's where your entry pattern begins, guys. A reversal bar begins the pullback, not the entry. You can define right where that pullback is most likely to go by using the large triggers. There's 2 sets, one from each chart on your entry chart. Somewhere from the top to the bottom is your retracement zone. But entries come from areas. Fibs, mid-bands, or yellow 1-to-1. So if you have a line inside of those triggers, either of those lines can be where the market is most likely to bounce. Creates a window of opportunity, if you will, when there's multiples. Because of the large chart advantages, guys, because that large chart is screaming up with absolutely nothing in the way, your rules say activate a limit order just above the highest point of support. Wait for the small crowd to get there. If they do, you are in the highest probability trend trade you could ever take. You're trading a pattern that typically wins 70 to 80% of the time. When does it lose? 20 to 30% of the time. Where does it typically lose? When the advantage of rule number 3 is no longer in play. If your retracement can break through the retracement zone, through the areas likely to create a bounce, and get below the triggers in a long trade, about 4 to 5 ticks, this is where you're going to cut tie with that trades according to the KISS plan because you no longer have the advantage of rule number 3. No areas beyond the triggers are used for entry because once you get below, you don't know if, when, or where that market is going to continue up. This is advantage lost, protective stop. In a downtrend, when the market is down, when the path is clear, when the rules are met on the large chart, you're going to turn your attention to the smaller, faster chart. And you're going to say to yourself, whoops, check it out. I took a picture this morning just for the shorts. Come on, pictures. And if you're new in here, notice that I have over 20,000 pictures. There's a reason I read charts fast. Here we go. When the large chart has the advantage of momentum, when the large chart has 4 triggers below trouble and hasn't reached the next area, we turn our attention to the smaller, faster chart. And before the reversal bar even prints, if you learn the phrase, my trade comes from an area inside of triggers, you will activate a limit order just below that lowest point of resistance and you will wait for the market to come and get you. Guys, this was 7 minutes before class started. And that is exactly everything that we just talked about in the first hour. And it's just a pattern. Trigger lines define the retracement zone. Areas inside of triggers define where the bounce is most likely to happen. Anything beyond the triggers is game over. Don't want it. Advantage gone. And I will take that loss. And I will be cool with that loss. That's a good loss. And guys, small losses are a normal part of a positive equity curve. Small losses are not a failure, guys. It's just a cost of doing business. So we're learning a pattern. And here it is from November 6th last year. If my large chart background is green, my trend is up, I choose to look for long trades. If there is separation between the small and large, the colors match, the gap is there, I have the advantage of momentum, and when I have the advantage of momentum, this is a market that's going to be difficult to stop. With only 2 triggers through, I do in fact have the potential to break that divergence high, and should I choose to, I can wait for the market right at an area inside of triggers, guys. And you see that area where the bounce happens? Looks like a tail on the large chart. This is how you're going to study this. If I go back historically and I see the rules met and I circle a tail and it bounces off an area inside of triggers, guys, this is the high probability trend trade pattern. This is what gets the ghosts to quit eating you most of the time. It's true in 2025, as true as it is in 2021. First, it's momentum, potential to break, pull back to an area inside of triggers. This was presented by a client. This was also presented by a client. Momentum, potential to break, pull back to an area inside of triggers. This is repeatable. It is testable. It is provable. And guys, this is what creates the advantage. Let's see if we can find one. Monday morning is always a little bit harder to find the perfect trade. Man, sakes alive. So let's do this. Let's go just see if the pattern repeats. And guys, this one would have been into a termination condition, but I want you to see something. Because it's into a termination condition, it doesn't fit my rules. But even though it doesn't fit my rules, doesn't have an edge, it's still a pullback directly to resistance inside of triggers. And you're going to learn to pump the brakes on these because it's more likely to lose than win. This one happened to win, trying to teach you to break your rules. Snap back to the mid band right inside of the triggers with all the momentum. As the market goes up, we're losing momentum. We're directly into a termination condition. And rules 1 and 2 both say don't bother looking for an entry. There's the S&P. There it was with the potential to break. Let's go back to the smaller, faster chart, see if the patterns hold true. Whoops, where'd it go? Dun, dun, dun. There's a pullback to the area right inside of the triggers. There's a pullback to the area right inside of the triggers. There's a pullback to the area right inside of the triggers. My gosh, the S&P is going nuts this morning. Oh no, I'm about to crash my Ninja Trader. That's okay, I'll bring it back up. Are there any questions? Any questions about a high probability trend trade? Any questions about recognizing momentum? Any questions about how you define a termination condition? Any questions about the pattern for entry? Guys, if you go back to the Nexgen spreadsheet that I gave you, strong triggers, rule number 1. Of course it is, Matt. That's not even your platform. Why are you listening? Strong triggers, rule number 1. There's like 50 pictures of what it means to have it met. Clear path, entry. There's your pattern, right? Where is it? Client trades. There's your pattern. There's your entry sequences. There's your KISS management plan. So as a brand new user, guys, we're not looking for money or trades. We're looking for advantages, and we're learning them individually with the understanding that when I understand strong triggers, clear path, and entry, I'll be able to define the best of the best. Does that make sense, everybody? Well, Mark, how do I get paid? You get paid by, I don't know, winning, I suppose. My goal is to help you recognize advantages, right? A trade, yeah, I already showed it to him, Victor, is momentum, clear path, and entry. That's your high probability trade, guys. That's the best of the best. With a little bit of study, and if you always go back to those 3, you'll know when one is gone. That puts you in a medium probability scenario. It has to be managed a little more assertively. Now, if you really believe that 3 is the perfect trade, When 2/3 of your advantages are gone, you might make the amazing decision to sit on your hands and do nothing rather than enter the trade, rather than smoke the hopium and wish and want. My father-in-law always said, wish in one hand, shit in the other. Tell me which one fills up first. Guys, it's never been the wish hand. I can't imagine it will be for you. So you're in control. When you know what's working for you and against you, guys, it's going to help you make good decisions. Trading isn't about your desire to win. Trading is very much about a pattern, a proven pattern, an edge, an advantage, something that is repeatable and testable that you know through your study has the potential to win more than it loses. Now we're going to go to Trading View. All right, Matt, now I want you to listen. Trading View is 3 rules. That's it. 3 rules. Trading View takes 2 charts. Should sound familiar. There's a big chart and there's a small chart. Now your big chart is a 15-minute chart. And a 15-minute chart is slow. It's so slow. It'll define direction, momentum. It'll define the targets. It'll define the terminations. Guys, this is your broad stroke of a brush. This is your large crowd. Your small chart is a 1-minute chart, and that's still a pretty slow chart. The small triggers on the 1 minute will define the immediate strength of the market, whether it's up or down, and this will define your entry points. It'll define where the fight is most likely to be lost. Now, if you weren't paying attention earlier today, everything that I teach in this room is based on the exact same idea, that the market will establish a trend, that some Yahoo will create a fight, Nexgen users will pounce on that fight and hope that the trend resumes. That's what we're going to talk about. Here's your indicators. On your large chart, we're going to start with triggers. You only have small triggers. You could just call them triggers since they're the only ones. If they're cyan, they're up. If they're white, they're down. Guys, color is irrelevant. They're either up or they're down. On your small chart, your trigger lines will be both small and large. You don't need the large triggers for a trend trade. I'm going to tell you that right now. The large triggers are on the small chart so that you can take advantage of the trades that come after the trend trade. They're either up or down. Both charts have areas. Areas are bouncy. I don't know if I mentioned that yet. They're T3 indicators, so they're exactly the same, guys. You have one-to-ones. You have divergence highs, divergence lows. You have a mid band, same thing. Outer bands are mid bands that aren't in the middle. They can stop markets. These are termination conditions. Guys, areas are bouncy. Now, some of you in the room will have chart prime areas, which are areas of supply and demand. There they go right there. These are a third-party indicator. If you want a free version of supply and demand, there is dynamic supply and demand from Algo Alpha. Some people are using support and resistance from flux charts. I'm going to tell you right now, unless you are a swing trader, there are huge gaps between these. I love how accurate they can be. I don't like waiting that long for trades. So if you're on a budget, there are some free options. So what we're going to do is we are going to use areas, and we're going to use triggers, and we're going to learn one trade. This is it, one trade. Now, Matt, I want you to watch this. Guys, is there anyone in this room that has found enough success with this one trade to pass an evaluation? Anybody in the room other than me? I've done it. Victor's done it, guys. There's so many options out there. This is the one that teaches you to start to read your indicators. So you have to define the trend. Your first rule says don't trade directly into areas on your 15-minute chart. Clear path, right? We want room to make money. Rule number 2 says don't trade directly into areas on your 1-minute chart. Can you guys guess? Absolutely. So Matt, an area. You're 5. All right? And this is This is the door to your bedroom. And you're 5. And you're running, and you're running, and you're running, and you're running, and boom, you just ran into the door. Matt, you reached an area. Does that make sense? So any line on a chart is an area. Whether it is a divergence high, this line is an area. These one-to-ones are an area. Mid-band is an area. Outer band's in an area. And what does that mean to you in regards to trading, Matt? Do you remember when I said areas are bouncy? That's it. What does that mean in the grand scheme of things? It means that every time, Matt, every time 5-year-old Matt runs to that wall is more likely to bounce you off of it than it is to just break. Does that make sense? Cool. So what your rules say is if you're going to take a trade, 5-year-old Matt needs running room to get to that wall. And if there's no space to build speed, there's no trade. And it says it on the 15-minute and the 1-minute, which all it means, Matt, is that I'm not going to start a trade when I'm already there. Does that make sense? So room to targets means that you've got room to make money. No room to targets, trading directly into areas, it just means that you're already there. You're already there at the thing that could take a bounce. So this is where the money is made. So rules 1 and 2 are designed to give you room. And all it means is that from wherever I enter this trade, I don't want something right in my way. That's it. And then we're going to go define the fight. We're going to buy or sell a pullback at an area. But there's a little trick to getting in on the good side of things. But let's define trend first. So on your big chart, you'll notice that there are no background colors. You'll also notice that there are no large triggers. And Matt, remember when I told you that I get rid of as many parts as I can? I try to remove everything that could confuse you or trick you or form an opinion. I don't need large triggers. I don't need background colors, guys. Trend is defined when my small triggers are either decidedly up, I'm in an uptrend, I'm looking for long trades, or they are down, I'm in a short trend, I'm looking for short trades. So defining trend should take a fraction of a second. Those triggers are up, I'm in an uptrend, I'm looking for long trades. Those triggers are up, I'm in an uptrend, I'm looking for long trades. Those triggers are up, I'm in an uptrend, I'm only looking for long trades. Is everybody good with that? And now, Matt, from where I'm trading right now, there's no room to get to those big purple lines, right? That's so tight. I don't have room to targets. Rule number 1's not met. From where I'm trading right now, I've got some room to get back to that line. I could say, yeah, I could probably find a long trade there. And from where the trading market is right now, I've got no room to get to those yellow 1-to-1s. They're hiding behind. The VWAP is there. There's just no room to make money. You're going to have to make that decision. So when we go and define trend, how much room is enough? This looks exactly like we just had. The triggers are up. How much room do I have before I hit something that could create a bounce? I'm going to talk about this real quick, and this is my take on it, Matt. As a brand new user, your reaction time isn't fast. It shouldn't be. You're brand new. My rule of thumb for how quickly I can read and react is at least $100 worth of profit. So if you're on the S&P, you want at least 2 points. If you're on the NASDAQ, you want at least 5 points. If you're on crude oil, you want at least, 10 ticks, 1 point. So $100. This is for the faster person, quicker reaction time, already knows how they're going to manage that trade. For the new user, $200 typically is enough. It's going to keep you patient longer, but understand that there's options beyond the very basic. Some of you in this room will do it with 40. Some of you know exactly where it's at, and you'll gauge momentum and say, I'm willing to take this risk. So Matt, it's an individual thing, but for the brand new user, I find that 200 gives plenty of reaction time, and then you can whittle it down as you get better reading indicators. Cool? So right here, triggers are up. Are you comfortable with that one? We've defined the trend. And from where the market is, from wherever I'm going to enter, do I have room before I hit something solid? So if I enter down here at 202, I've got like 10 points before I reach that outer band. That's plenty of room. That's like $200 worth. So that's rule number one. If I don't have room on the large chart, I don't bother looking at the small chart. But the small chart says the exact same thing. Don't trade directly into areas. So if I'm going to try to enter a trade and I go long right here, that resistance can create a bounce and pull me out of the trade. And if I decide, if I decide to go short right into that divergence low, that divergence low can create a big ugly bounce and take me out of the trade. And if I go long into resistance, or if I go short into support or long into resistance, so these areas can stop forward progress, which means that from wherever I take my entry, I want that space, I want that cushion, I want that room to targets to make sure that the moment I get into the trade, I'm not going to go head first into something that could stop that trade. Does that make sense, everybody? That's rule number two. Making sure that from wherever you enter the market, there is room to trouble. There's room before you hit something that creates a bounce. So far, all we've done is we have defined what direction the triggers are going. We have defined that there's nothing in the way on the 1 minute or the 15-minute chart, and there will be nothing in the way on the 1 minute chart. So now we wait for the fight. Here's your entry pattern. So in this particular trend trade entry, the trend is up already, decided 100%. The triggers are up, there's room to trouble, and I'm going to the smaller, faster chart. Well, once we define trend and there's nothing on the 15-minute chart, the beginning of the fight is these small triggers rolling. And when the small triggers roll, the fight is on. So you've got to look lower. Is it going to be support? Is it going to be a mid band? Is it going to be a pink 1-to-1? Is it going to be a yellow 1-to-1? Once the triggers roll, I'm going to look at each area of support below those triggers. And these are all areas that could stop that market and create a bounce. But there's a look that gets you in. Pink is the fight. To take a long trade, you need a reversal bar up, a green bar, if you need it to be a green bar. And both corners of that bar finish above the small triggers. The small triggers are the immediate momentum in that fight. They're counter to the trend. When you get a reversal bar from an area that finishes above those triggers, that is where the large crowd gets back in sync with the small crowd, and that's where the reversal to resume the trend is most likely to come from. And the only thing you have to be aware of is from wherever I enter that trade, do I have room before I hit something solid? Does that make sense? And it's just a pattern. And you have to define the trend using the small triggers. And you have to make sure there's nothing in the way, right? Don't run into the wall. On the small chart, as soon as the small triggers roll, now I'm looking for an entry. Guys, if your small triggers never roll, you don't have a trend trade. It's that simple. Once they roll, I'll draw a box around an area that's lower, and I'll say, come get me. Well, it's the small chart reversing, right? The large chart never blinks. The roll is the fight, and it's going down. Absolutely. Reversal of direction. Where is it most likely to go, Matt? To an area. Areas are bouncy. And you get that up bar that finishes above the small triggers, and that's where the market is most likely to go up, back in the direction of the large chart. And it looks the same every time. When you take a trend trade, It literally looks the same every time for a long trade. And Victor, you had one earlier today, right? So everything that we just talked about, here we go. Everything that we just talked about. Check it out. First, the triggers are up. Then there's room to trouble. Here's your fight, Matt. It comes back to that area. There's the close above. And there's Victor making $340 up to that zone. It's just a pattern, but it starts over here on the large chart. When the triggers are down, the trend is down. When there's nothing in the way, then and only then will I go look to the small chart. Because the small triggers rolled up, my job is to look higher, to say, I need that fight. I need the small crowd to push. Giddy up, let's go. And when they get there, I don't just jump in. It takes a down bar that finishes below the triggers. That's where the market is most likely to reverse from an area and continue with the large chart advantages. Do you see it? It's the same pattern. It doesn't matter if it's the NASDAQ. Hold on. I did one this morning. There we go. Doesn't matter if it's gold. The triggers are up. There's room to trouble. Pulls back to support. Closes above. I took 2 off at the first sign of trouble because these are bouncy. And they got my third one before I had to go break even. And look at how I wrote it on the chart, Matt. First, it's up. Strong, we're about to talk about that. Pull back to the area with the close above the smalls, giving it a chance from the strong side. It's the exact same pattern. You can defend it in a court of law. Trend, room, entry. That's all it is. And then great entries create manageable trades. All we've talked about is entries. Have you guys noticed that? We haven't talked about taking profits. We haven't even talked about stop placement, really, other than NinjaTrader. Guys, management is where money is made. Management is what sets you apart. Management is where you abandon the idea of hoping shit works out and have a very pragmatic, mechanical, focused reason for exiting a trade. On TradingView, you will know exactly how you're going to manage that trade, whether it's going to be assertive, whether it's going to be a little looser, and it all depends on where the most current price is in relationship to the small triggers on the large chart. So there's 3 places. There's left, right, and center. If you are left of the small triggers, this is the strong side of the small triggers. This is why we don't enter a short trade till we get to the weak side. Strong side of the triggers is where 1-minute areas are most likely to break. Strong side of the triggers, this would be your best momentum ever. If you're on the right side of the triggers, this is the weak side of the triggers. Because the 15-minute bar is so slow, you're still looking for long trades, but it's not the strongest momentum. So 1-minute areas are most likely to create a bounce, which means your management plan will probably have you focused on getting paid, getting out, waiting for the next opportunity. Because guys, one 15-minute bar can go from the weak side all the way to the strong side. And in the middle, it'll reach the transition area. So transition means that I'm not strong or weak. So maybe I get paid at the first sign of trouble. Maybe I get to break even, but I hold that one contract to see if they want to get to that next level. And if you back up, you'll see triggers are down, strong side, room to trouble. That's how I read a large chart every time. Because the small triggers roll up, I wait for a pullback to resistance. There's my entry. And because I'm on the strong side, I may see if this area wants to break. Maybe I get paid there. And then smalls are up. They're in transition. There's room to trouble. So when I take this entry, maybe I take partial profits. Maybe I get to break even. And maybe I just see if they want to continue up. But I know how I'm going to manage before I ever take the trade. So live chart read. Triggers are up. I do have room to trouble. There's my pullback to the mid band. But guys, I don't have anywhere to go. Rule number two's just not met, which means that I sit on my hands because I don't have to trade into a brick wall. Triggers are up, room to trouble, absolutely nowhere to go. Does that make sense, Matt? Do you see all that mess right there? That says, dude, you can hope it goes up, but why bother? Gold is up and there's absolutely nowhere to go. It is already at the area that could create a bounce. And if you look at your small chart, it's creating a bounce. Did I mention 90% of your day will be spent reading indicators? 90% of your day is doing nothing. But when you know what's working for you or against you. So if the perfect trade is direction, clear path, and entry, when you have all three, that's the high probability. If one goes away, and guys, this is the one that most of you guys break. Because I'm on the strong side of the triggers, I'll run it tight into that area, right? So typically, clear path is the rule that you guys choose to break. Manage it. Be ready to manage it. Be assertive in managing it. And if you're missing 2 out of 3, pretty cool. Just sit still. Relax. So every morning, I say in my cockiest voice, I will give you everything that you need to be successful with the software. You have been provided rules. You have been handed a plan. You have been given a spreadsheet where not only can you track your progress, but you can also see the pattern, both of them, over and over and over. You have the ability to post in the room, to ask a million questions, to make sure that you always have clarity. And guys, you've got the patterns. So before the break, and it's time for the break because I need a break every now and then, I'm going to read you something that John Novak wrote in 2008. This is the part that you guys hate. Nexgen will supply the Fibonacci-based software and trading rules along with the coaching that will increase your odds of winning more than losing. And after choosing Nexgen to be your technical analysis partner, don't worry about how long it'll take you to become a profitable trader. Worry about the process of learning. So guys, if you're like, oh, this has got to work because my job doesn't pay enough, you're going into it with the wrong mindset. Remember, simulation of your trading plan is not trading. It is practicing the movements of trading until they are so ingrained in your muscle memory that you no longer have to think about trading. And when I say that, when you go to NinjaTrader, my goodness, and you look at it, holy smokes. No separation, no strength. I do have a clear path and I don't have any areas inside of triggers. That's how long it takes me to know that I simply don't have trade rules met. And whatever happens after is not my concern. I'm telling you, it can be that fast, but you've got to go through that muscle memory. Your second goal is to simulate 25 of the exact same trade setups, not almost the same. 25 perfect trades, 25 rules met 100%. This is my advantage. They should look identical. And what you're doing is you're learning to do it without deviation, distracting thoughts, or hesitation to act. And then writing down, using screencast or snipping tool, whatever you have, what could you or should you have done better? That's where I come in, because if you don't see it, I will. And we'll talk about it. And I won't just say, man, you screwed it up. I'll say, hey, here's how you fix it. Here's something to write on a piece of paper to make sure you understand those termination conditions. Here's a picture of that momentum so you never make that mistake. Guys, everyone's different, and it takes everyone a different time to become consistent. Every time you repeat the 25 trades successfully, you didn't take a chance. Like in a prop firm, right? Let's go see. I can do it on paper. How do I do it under pressure? And you've got to do it without plan, without deviation, distracting thoughts, hesitation. And if you fail to follow your plan and end up losing money, you're not a professional trader yet. Don't despair, but don't do a ton of damage. Prop firms make this so much easier. But prop firms also give us balls the size of bowling balls, and we don't care. Oh, it's $20. I'll blow out 75 of them and never get any better. Guys, make it an education. Go back and take some on simulator. Get good at it. You're not losing, you're learning. And I'm going to fast forward. Nexgen will give you analysis, rules, and coaching, guys. It's up to you to do something with it. It's up to you to study it, to practice it, to ask for help. I can't make anyone in this room a profitable trader, but I can give you all the tools so that you can become one. I'm here to help, but you got to do your part. So as we get into the second half of class, posting in the room is going to be the biggest thing, guys. Posting in the room, asking questions. Tell me what you see. Tell me where you did it. Tell me why you did it. Say, Mark, I don't have any freaking idea what I'm looking at. Help, and I will help. So if you're on NinjaTrader, here's how to annotate. I want you to define momentum, but I don't want you to say, oh, it's strong. I want you to say the smalls are below the large. The colors match. Rule number 1 is met. And I want you to talk about your termination conditions. And guys, this is not for me. This is to get you where you want to be the fastest. And I want you to use that magical phrase. Price has not reached support. 3 triggers through previous area. Potential to break. Manage a bit more assertively. You'll know how you're going to manage this trade before you ever get to entries. Sold a pullback at an area inside of triggers. Used a reversal bar because of the divergence on the small chart. Half off at trouble. Trailing stop. You drop it in the room and you say, Mark, did I read it correctly? Is there anything you see that could be helpful? And my answer will either be, man, you're amazing. You wrote a recipe for success. Get this into your plan. Or, hey, you didn't really have that clear path that you thought you did. Let's go back and review how to count triggers and make sure that you're not making that mistake. Do the same thing for TradingView, guys. And I'm telling you, if you go through this process, and most of you don't want to do it, this feels like work. I want to make $1 million a year, but I really don't want to work. Guys, if you go through this process of annotation, there's a neurological connection that comes in between what your eyes see and what your brain thinks. And the more times you write it out, the faster you read charts, the quicker you recognize advantages. And honestly, the most wholeheartedly, you begin to trust those advantages and that edge because you're going to see that pattern over and over and over. Are there any questions? Even without triggers, I can see price reached Fibonacci support and none of the triggers broke. And look at the bounce. And price reached yellow 1-to-1s and none of the triggers broke. And look at the bounce. Guys, there's so much information. You've just got to learn how to listen. So I'm going to walk away for 5 minutes. When I come back, I wanted to reboot that and see if, oh man, I'm going to have to fix my gold chart. That's okay. Wow, the trigger set up and it went up. How cool is that? When I come back, guys, we are going to go through the charts that are posted. We're going to talk about what you guys saw, how you read it, what you did. I'm not going to be the trade police. That's not my job. I don't want that job. So I'm not going to say, oh, dang it, Victor, I can't believe you did that. Shame on you. I'm going to say, hey, Victor, did you notice that you only had 3 ticks before you ran into something that stopped the market? Hey, Victor, were you prepared to manage? Hey, Victor, I noticed that all the other advantages are there. I like how you leaned on those advantages so that you could create a plan that suits your needs based on your abilities reading the indicators. But guys, I am going to remind you, and I'm going to tell you right now. Here, we'll do like a little bubble. Your read is not your rules. Guys, what you see on the chart, the patterns that you begin to pick up on, if they're not written out in your trading plan, those are not your rules. Your rules should be focused. They should be definable. They should be consistent. They should be, I have proven that they win more than they lose. So as a brand new user, where's my picture? Everything is high probability trend trade. That's your checklist. You're going to begin to see scenarios outside of the core that both help and hurt trades, whether it's a way to manage, whether it's a reason to not take it. Guys, the foundation that we laid is this, that's all it is it's a foundation. But if you start noticing things, guys, it's not about just saying, okay, this is my plan, but this is how I'll break my rules if. Rewrite your plan. Plans are written. There are no mental plans, guys. I'm going to tell you right now. Someone in prop firm this morning said, I'm tired of losing. I've been losing for a year. Most people fail at day trading because they don't have a plan, because they don't follow a plan. The hardest thing that you'll ever do is nothing. So we're going to go through. I'm going to pause for a minute, guys. When I'm back, we're going to click on charts. We'll do chart reads. And if something happens on the charts that fits the rules for the KISS plan, guys, we'll take that trade. We'll manage it according to the KISS plan. We'll have some fun for educational purposes. So go stretch your legs, refill your water, pet your dog. I'll see you in about 5 minutes. Guys, I am back. Wayne, absolutely positively no. We couldn't log into demo mode, right? You remember that? We couldn't do it, wouldn't let us, couldn't get in there, couldn't do the simulator. I built that account so that I could do that live to make sure that it's not possible. And then once we got our answer, Wayne, I said, I've got the account anyway, I'm going to pass it in a day. That's all it was. Demo mode does not count towards the evaluation. You can't even get into demo mode. I just happened to have a $150,000 account because we needed that account for an example and it doesn't cost me anything. And then I thought, well, can you really pass it in a day? And the answer is without question, yes. I passed it in about 45 minutes with the right trades. Not bad for an $8,500 goal, right? So I just thought it was funny because normally I wouldn't even have a Nexgen Pro Trader funding account because I can't get paid on them. But it was fun to take it and pass it and do it with patterns that we talk about in the room. So yeah, that's it. That's all I wanted to say. Here we go. Let's click on some pictures, guys, and see what you guys are doing this morning. I'm going to click on every link. If I miss your link, I apologize sincerely. It's never intentional. And if I miss your link, just go, hey, Mark, you missed this one. Drop it in the room. It is never indicative of my affections for you. It's just simply that I'm human some days, and I don't enjoy being human, but it happens from time to time. Scrolling. Couple from Wayne, one from Victor. Boaz. And guys, on the same note that I'm not the trade police, I am going to tell you, if you beat the odds and got lucky, man, I'm going to point it out. Don't get your feelings hurt because luck tends to run out. So I think we already saw this one. The trend is up. Price is in transition. There's room to trouble. The market pulls back, doesn't get below that area of support, ultimately closes above. Victor gets in, and Victor from 52, you only had about 8 ticks before you hit a pink 1-to-1. The same pink 1-to-1 that created the problem previously. And I don't know if you saw it or not, but there was nowhere to go. It had already been there, right? So it's tight, but you chose to take it and it works out. Rule number 2, guys, going to be the biggest challenge. And Matt, this is what I was telling you. Some people are cool with a couple ticks and they're like, man, with this look, I'm willing to give this a shot. Directly into trouble. Victor did it. It worked out great. And then Joel, I don't know if Joel's in here. Joel posted these in the wee hours of the morning. And guys, this is a good example of when the market just beats your ass. And it did. All the momentum, nothing in the way, and it was a loser. And it's the perfect trade and the perfect pattern, and it's the one that that typically wins more than it loses. Okay, Wayne. Have a good 45 minutes. And it's all the momentum, and it's a path, and it's the pullback to the area inside of triggers, and it's another loser, guys. And this is the perfect loser. It's the perfect trade, and it kind of happens 3 times. Same look, and it happens again. Same look. And guys, there will be times where the market can't figure out what it wants to do. There will be times where the market isn't giving you what you need. There will be times where that 70 to 80% seems like it gives you all 70 to 80 right off the bat. When that happens for me, no worries. I'll do the feedback on the video. You guys can catch it on the video. Do you need it before you split, Trina? I can do it right now. Triggers are up. Weak side. room to trouble, pull back to the area, close above, make money at trouble. Oh my gosh. Can't find a thing wrong with it. Great job, Trina. Just a trend trade. Just a trend trade. It's fun when you say that, right? Oh, it's just a trend trade. Learn how to take it. Life is good. All right, weak bottom. Odds favorable momentum. 2 out of 3 triggers through. Pull back to the area inside of triggers because it's medium probability. Pete says, let me manage assertively. I'll make 10 ticks and I won't hope. Great job, Pete. Perfect execution of a medium probability trade. With all the momentum, accidentally clicked sell. Pete, true story. I did the same thing. I was just telling my wife. I was taking a short trade and hit long, and I was relieved of $300 in a half a second. In a half a second. And then my next trade, I deleted my stop on accident. Don't know how I did it. And I was out $400 in about 2 seconds. I was down $700 before my day ever started from silly mistakes. Guys, you're going to make silly mistakes. Take a deep breath, get back on the horse. Nice recovery. Turns into the perfect medium probability trend trade. And you get paid. Nicely done. All the momentum. In between the fibs, just jumps in and jumps out, momentum and path. When everything is screaming, when you know where the market may bounce, gets in after, gets out before. Perfect, Pete, momentum and path. Same thing the other way, momentum and path, out after trouble, or in after trouble, out at trouble. Perfect, momentum and path. Guys, you're going to hear that all day in this room, momentum and path. When everything is screaming on the large chart, when there's nothing in the way, here's a pullback. Well, this is kind of weird. Was pulling back to the mid band but stopped, didn't make it. So Pete says, I'll go ahead and pay the fine. I'll get in a little bit lower, and it worked out beautifully for you, Pete. And then Paul, did you catch the lesson on this one? Is he in here? Did he split? So the second trade on y'all's plan for TradingView is what we call a momentum trade. And what it means is that when the market is screaming the way it is here, when there's nothing in the way, there's this idea that as long as you have that strong trigger look, smalls below the large, space between, you can allow the market to break below an area. And when it snaps back to it, right there, that area has a really good shot of stopping things and continuing down. This is what we call a momentum trade. So guys, this is one of the ways you can use the classroom. So if you're like, I think this was it, I wonder if that was it, take a picture, draw an arrow. Hey, Mark, is this the momentum trade? And the answer is almost. 1 bar early, you're going to wait right here at this line with a limit order. You're going to put a stop 4 or 5 ticks above it, and you're going to use that momentum, hopefully, to carry you down to the next area. And guys, this is the second trade in your plan, which means that you have to understand what it means to break an area. You have to understand what it means to have momentum, and you really have to understand what it means to have room to the next trouble. All the things that you learn in the very basic trend trade. So Paul, good job. This is how Jen gets on my good side. Jen says, Mark, not every picture is a trade. Not every time I snap that little camera am I taking a trade. So check it out. The triggers are up and I've got room and they pull back to support, but the close above the triggers has nowhere to go. Matt, do you see this right here? It's the perfect large chart, but because that area is in the way, Jen says, rule number 2 is not met. This is not my trade. And look what it does. It keeps her from taking catastrophic losses. Jen, this is such a good picture. Rules are in place for a reason, guys. They're designed to give you an edge. And then it pulls all the way down. There's your close above. And once again, directly into trouble. Zones stops up. Areas are bouncy. Areas are bouncy. And as a man, I'm a big fan of bouncy things. So, but in trading, they're not so good. Triggers are up. in transition, room to trouble. Oh, we already saw that one, Victor. That's that trend trade you took earlier. All right. Boaz. Momentum supported by the 15-minute. Price pulls back and you just jump in. Wrong side of everything. Now, Boaz, you may not be like me. And you're probably not. You're probably smarter than me. Just because the 15-minute is screaming, it doesn't make that a safe entry. I made a lot of mistakes, cost me a lot of money, leaning on that 15-minute, that 15-minute chart and saying, oh, I'm going to take the wrong trade anyway because of this. Now it supports it beautifully. And I think that reversal bar gives you a fighting chance. And you knew that it was problematic, and that's probably why you exited so soon on this one. This is not the right one. Okay, but the lesson is the same, right? And you're not even really at an area. You're below all the areas. So just, it's an aggressive. You got lucky. I like it when you guys get lucky. I want you to get lucky. But I want you to know that you're lucky. This looks like a cav chart. Triggers down. Maybe this is Pete. Rolled, red fib. It's just a momentum trade, and it's beautiful. Snaps below, pulls back. Beautiful, beautiful momentum trade. This is solid. It's okay, Boaz. We all take bad trades every now and then. I like that you'll post them in the room and have the conversation. Okay. Trend is up. Well, trend's not really down, Wayne. Not yet. It could go down. Room to targets. Broke the zone. Entered on the way up out of the zone. Wrong side of the triggers. I don't know that it was a good loss, Wayne. Oh no, you took the momentum trade. Never mind. So Wayne's going to catch this later. Guys, if you want a momentum trade to have a higher chance of winning, you need to be on the strong side of the triggers. You were in at 077, 037, which is decidedly the weak side of those triggers, 100%. And guys, if you're on the weakest side of the large chart triggers, your momentum trade is going to be less likely to work. It does fit the momentum trade entry rules, but the large chart on the KISS plan says be on the strong side of the triggers for the highest chance of success. Now we're up. We're on the weak side. Broke, pulls back, closed above. Then it pulls back and it closes above again and then just stopped out with rules met. And I agree 100%. From the weak side, it's a good shot. Just didn't work. Stops a little tight, pivot low, but good stuff. All right, trend is down. Price is in transition. Room to targets. Need to pay attention. I almost stayed on that trade right before market open. This time it would have worked in my favor, but there's no telling at open where the market will go. So better to take the win and avoid surprises. Pulls back to the area. Closes below. Out at trouble. I like it. One of the things you guys will notice as you learn this methodology is this is his close below, but his entry is not till the next bar. Victor waits until his timer zeroes out, and then he hits sell, because there's nothing worse than anticipating a trade only to have it close way up here. Victor, it's a perfect trend trade. 355, take that all day long, man. All right, Boaz. Momentum, supported by the 15-minute. It pulls back to support, and you're in right at the support. Thank goodness it held. Triggers are far, should take the trade on the up bar. I don't disagree, Boaz, because where are you going to put your stop if you're already so far on the wrong side of things? That reversal bar, it only costs you a couple ticks, but it at least gives you a place to put the stop. It's a great read. Every trigger is above support. Support's more likely to create a bounce up than down. You get in right at the area, a little bit of confirmation. At least gives you a place to put your stop. And then the third divergence in the same price range. Nice exit. It's a great chart read. Momentum, 3 triggers through, pulls back to the area. Almost to the fib, not quite, pulls back to the area. And then there's your third divergence, and it's party over. Missed the easy one. Yeah, happens sometimes. It does happen sometimes. But once you guys get a little bit of time under your belt, you realize that the next one's coming. The next trade's always coming. You can't exchange $174 million in a day on one trade. I don't think I've ever seen it. It could, I suppose. And then Miss Trina, we saw this one. Everything is up, pull back, close above, make money, rinse and or repeat. Boaz, not quite the best momentum, rune to trouble. Pulls back to the area. There's your circle. Didn't quite make it. Didn't quite make it. And then where you entered, we had lost momentum, but it was a clear path. You take the confirmation and sneak in. Great exit with the loss there, with the loss of momentum. Good stuff, guys. How is that? Weak triggers. Rule number 1's not met. Clear path. Rule number 2 is met. Area inside of triggers, technically, rule number 3 is met. 2 out of 3. If you chose to go long right here, we'll see what happens. Me personally, I prefer momentum. I like a market that's telling me it wants to push in the direction of the trend. Zones are shifting. Price reached support, pulled right back up. Crude hasn't done a darn thing this morning. Triggers are up. Room to trouble. Nowhere to go on the small chart. So guys, this is one of those times. I would love to see the small triggers roll. I would love to see it pull back to an area. I would love to see it close above. That's what it would take to get me into a trade on the NASDAQ right now. I like the retro video game text. It's up. It's transition from 96. There's plenty of room. Market pulls back, closes above, and you're out of trouble. Nice job, Phil. And because this is still support, that close above is no worries, right? Trading from support's kind of a nice thing. Good stuff, dude. Great trade. Same pattern. Over and over. Same pattern. And then the zones are shifting, so it looks a little different. At support with the close above triggers, Papa. So let's talk about why he was willing to take that. So when price pulls to support, it never breaks below it. This is all support, right? And Papa, that's where we want to go long. So Phil said, I realize that I'm in the zone, but I'm in a zone of support. I'm in a zone that's more likely to create the bounce in the direction of my trade. Does that make sense? So he's using the idea that it is in fact support, and he's making a choice to take that trade. Now on the large charts, very often when people are taking trades, It's a way bigger area. Um, and they're typically trying to go long from inside of a zone that's behaving as resistance, or trying to go short from a zone that's behaving as support. So you've got to take that into consideration. No, that's okay, but that's the thought process. And guys, this is the great thing. Papa, you may not be comfortable with that trade. That's cool, right? It's not yours. It didn't affect your account. Phil is at a place where he goes, man, this is support. I want to trade from support. That's a close above. I'm comfortable taking this trade. Always ask the questions. That's not being the trade police. You didn't say he screwed it up. You're saying, this is my understanding of the rules. What's it mean? And Phil will tell you, because it's an area of support, he's comfortable. Yeah, but it didn't open above. So just because the white bar is up, that's what he used for entry. It's an up bar. But because there's no terminations here, the white bar really doesn't fit into a plan there. So Papa, remember earlier when I showed the picture? You may not have been in here yet. I'm not sure if you've seen this one yet. Um, where everything kind of stems, right? And this was more on NinjaTrader, but everything stems from the perfect trade. Everything stems from that basic understanding. And then as you build reps, you start to see things that you may work into your plan outside of the super hyper conservative, best of the best, learning to read my indicators way. And that's kind of what Phil's done here. Phil said, and Phil will tell you, it was 2 months ago, Phil got chewed up inside of his zone. And he was like, man, this sucks. And now he's grown to where he's starting to recognize where, as long as it's support, it's good. Phil, I don't forget things, man. And I'm telling you, it's probably hell being married to me. But I don't forget stuff. Sometimes I wish I would. But if it's support, we're trading from support. Yeah. So take some pictures, Papa. But ask yourself, is it behaving as support or resistance? And let's go see if we can find an example of the other side of the coin. And I'm sure that we'll be able to. Maybe. I'm trying to find a good example. Yeah, I think it does too. I think that's one of the cool things about the room. All right, so here's an example. No, that wouldn't be it. Hold on. There's an example where it pulls back and it never breaks support if the one-to-ones weren't there. I'm trying to find one. Comes back to support. I'm looking for one that kind of skirts it a little bit. And I'm not finding... Okay, so this would be an example right here, Papa. When this bar breaks below, this area that looks like support is actually resistance, right? So if you chose to take a close inside of that zone, you're not trading from support, you're trading from resistance. Does that make sense? Cool. And I think, but that was hard to find. But if you look at that one, and then you look at his, you'll see that it never breaks to turn it into resistance. And it's that subtle little difference on your entry chart, I think that changes the whole dynamic of it. But you've been avoiding those because you're kind of in the beginning, right? And you're piecing all this together, and you're learning how to make good decisions. And now, because the high probability trend trade is starting to make sense to you, so resistance becomes support, and now it's resistance again. So that close above is directly inside of resistance. Here it is live. These bars that break below mean that this is resistance, which means this entry right here doesn't fit the rules. That would be trading long from an area behaving as resistance. So that's a pretty good live example. So what we would want, we would want the break and then the pullback. And I don't know if it's going to happen. It may not. I don't know. I can't predict the future. Good lesson there. Thank you for speaking up, Papa. Crude oil is just dead. S&P is trying to figure it out. Because my rules aren't met, Boaz. Because this is behaving as an area of resistance. And when I talk about my personal entries in this room, it has to fit the KISS plan. That doesn't fit the KISS plan. Because when price breaks above resistance, resistance becomes support. And then when it breaks back below, that support becomes resistance. So an entry right here would be trading directly into an area of resistance. Does that make sense? Some of you might take that trade. That's your right. But remember that everything that I do in this room, when I talk about it live, it has to match this plan. All right, hold on. I'll show you exactly what we're talking about. When price reaches this area, that's an area of resistance. Does that make sense? So we'll do a red R. Price has reached an area of resistance. The market has trended up, it's hit it. And then when a full bar breaks above that area of resistance, Boaz, it tends to behave as an area of support. So we'll make that blue. And then when the full bar breaks below again, it actually goes right back to being resistance. We'll make it red. Are you following me? So what are we seeing? We're seeing a market that can't figure out what it wants to do. That's the bar right there that turned it back to support. So currently, I don't know what it's doing right in the moment. This is an area of support again. And there's the market pulling back to it. It's not a momentum trade. But if you decided to go long right here, you would be going long from an area of support. If you decided to go long right here, you are going long from inside an area of resistance. Does that make sense? And I don't have rules met for a trade right here. But by hanging on and forcing your areas to be support or resistance, they can at least support the trade. So there's my triggers down. And look what they're doing. They're starting to push down. So what do I need? I need either to commit to a trade from the wrong side of the triggers, or I need to hope support holds, right? Or I need a deeper pullback. I need something that fits the description on my checklist. This was my pullback to support. And this is one of those weird spots, Victor, because we don't know if those triggers are going to be up or down here, right? We'll know in 10 seconds, depending on what this bar does. 4, 3, there we go, 2, 1, boom. Now they're down. Now I need a close above from here. And if I don't get one here, Victor, my next option's all the way down here. Does that make sense? And now they're just messing with you. So there's no trend trade rules met here. I would take that trade all day long if I were trading, but that doesn't fit the plan. Because we've pulled back to support, all my triggers are above, everything is perfect here. That's the area to hold. I would be okay with the risk on that trade, but my trading isn't always the KISS plan. Sometimes it's the smarts that I've accumulated over the last 6.5 years. Good lesson there. And sometimes you're just not going to get your trade. That's the part that frustrates people. Sometimes you just don't get your trade. Large chart, triggers are perfect. Room to trouble. Beautiful entry. Did you get stopped out? Oh, first target. How did you get stopped out? Hold on. So what happened? I got spooked in the wrong strategy. I was uncomfortable with how far I would have to place my stop. I was afraid of losing. Despite looking back, everything was great. Do you have a two-target strategy like the ES KISS strategy? Aaron, I I don't have a KISS plan for NASDAQ because NASDAQ is too freaking fast for 99% of the world. There is no keep it simple on NASDAQ. NASDAQ's difficult. And if you have the least amount of reservations in your plan, this happens. Scare the shit out of you. It's fast. Okay, so why did you get scared? Let's address that. What scared you? The threat of losing? Which is okay. That's a valid fear. There you go. You also didn't want to take a massive winner, did you? Can we look at the other side of it? Aaron, I want you to do me a favor, and this is a drill that I had to do for myself. I want you to describe one bad thing about this trade. Give me one bad thing about this trade. One negative. And don't say the stop. You can't say the stop. The negative in that is your brain. But let's go through it. Odds favorable momentum. Clear path. Pull back to the area inside of triggers. All the room in the world to make money. There's not one negative in there. And Aaron, you're just learning to trust the plan. That's all it is. Why are you on the NASDAQ? Why'd you give up the S&P? Got tired of being able to read your indicators in the moment? And that's cool. That's your right, man. Knock it out if you want. I'm really good at what I do, Aaron. I don't trade the NASDAQ at first hour. It's too fast for me to read. So how do you develop trust in the plan? There's the real question. How do I develop trust? Cool. Well, you did it. The entry's perfect. So, Aaron, you're 90% of the way there, man. You know exactly where your entries come from, right? So what's the first step? The first step is great entries. And congratulations, you're beating that one. What's the second step? Do something with them. That's the hard part, right? Because you can't lose if you're not in a trade. And the sooner you exit a trade, the sooner you don't lose, right? That's how I was. Man. So Aaron, you're going to think this is funny. I think it is now. I didn't at the time. So the first time I ever traded live, I lost $5,000 in 2 hours. So I studied. I took about 2,000 pictures and I made sure that my entries were good. I did all the work that I should have done in the beginning. But when I finally went back to trading, I would take the perfect entry and I would get scared and I would get break even. Or I would take the perfect entry and I would get scared and I would get a tick. And I might take 20 trades in the day, right? And I might be up 15 ticks on the day. And Aaron, I'd be down $200 to $300 a day on commissions because I didn't trust the plan yet, right? I learned the entries on Simulator and I made sure that I could get in the right spot. But what I didn't do is I didn't let my management plan play out. I didn't have any faith in the management plan. So how do we circumvent that? How do we get to the good side of that? It starts with exactly what you did. Your entry is freaking rock star. Just rock star. Aaron, the KISS plan management doesn't work on the NASDAQ. Why? Because the NASDAQ is a 34.5. The NASDAQ is a 13.2 on the large chart. It is 3 times bigger than what you're accustomed to. So stops are going to be 3 times the risk, which means your targets probably need to be 3 times as well, which means you need a $300 winner, which is right at 15 points, which from your great entry would have been right at about 99. And then your second one would have been up there. But this is how you fix it. This is how you fix the fear. And let me take a look. That's part of it. You're on simulator. Man, I'm going to quote John Novak, which I hate because it's going to get me. If you are scared to lose on simulator, how will you react live? And you'll get over that fear, Aaron. And if you look at someone in this room, I'll just use me as an example. When I'm on sim, Aaron, my stops don't move. When I'm on sim, my targets don't move. When I'm on sim, it is analysis. It is me trying to figure out how to squeeze the absolute most out of the market in a non-threatening environment, which means that I probably hold longer on sim than I do in real life, right? On great entries, as I'm developing a management plan. This was what we were talking about with Wayne earlier, where I took, Phil, you'll love it. There was a termination, white bar pattern, $2,500 to the outer band. And then trend trade, fails, trend trade, wins. And that was like $9,000, 8,500 over the course of an hour. But I've done so much study on my management plans that I know exactly how I'm going to manage it. So Aaron, let's go through and just refresh your course. In the plan here, let's go through the KISS management plan. This is how you beat the demon that you're fighting right now. Starts with great entries. And my friend, you know where the great entries are. So congratulations. The hardest part of management is taken care of. Now we develop trust. If my entry is a tick or two below resistance, then my stop is 4 to 5 ticks beyond the triggers. And that doesn't work on NASDAQ either, because NASDAQ will run your ass right over and then go. Just so you know, as you trade NASDAQ looking for entries, it's different, man. It really is. So the hard thing is, Aaron, at this point, I want you to be willing to let that stop get hit. You're on simulator. I want you to force them and come get you where the market shouldn't go. And just sit back. It's monopoly. Do you know how to reset your simulator? Yeah, NASDAQ will run your ass right over. NASDAQ won't even hesitate. There's a different set of rules for entry on the NASDAQ. So here's what you do is you just leave it there. And you put your hands on your head. And you say, if they want my money, they are going to have to go where they shouldn't. Does that make sense? And win, lose, or draw, brother, it doesn't matter. It's monopoly money. You can't pay your rent with a simulated trade. So what you're doing is you're learning to trust that this wins more than it loses, right? And you're learning to trust that you know exactly where your advantage is gone. And the targets are 100 and 200, and I've seen you crush that. So if you don't get stopped out, Aaron, and you will 20 to 30% of the time, it means that they gave you a reversal bar in the direction of your trade, which means your new stop is 2 ticks above that reversal bar. So where you had $150 per contract initially, now you've got $30 per contract. And Aaron, once again, hands in the air. It's either going to stop you out or it's not. Who cares? It's simulator, right? And if they stop you out, good for them. They got you. But if they don't, they're going to your first target. And when they go to your first target, the KISS plan says go break even. That's not your best stop. But it gives you the courage to hold for the second one because now you have nothing to lose. If you go to that courage point before the market's done it, done its job, you're just going to get stopped out and angry. And then if it goes to the second one, it's a $300 trade. And Aaron, have you seen the KISS plan enough to know that when it's perfect, and I'm talking about when it's the perfect trade. That's not at all the perfect trade. I'm clicking on links. When it's absolutely perfect, it's more likely to go to the next area than it's not. Does that make sense? But if you don't sit through this 100 times, you're terrified of losing the trade, and that's normal. But if you don't see this work over and over and over, you're afraid of losing. And if you don't take the time to see it go the distance more than it doesn't, you're going to move stops faster. So what I encourage people that are struggling with management and holding a trade and letting fear grab them and grip them is Aaron, I encourage you, let it be simulator. Sit on your hands. Let the management play out. And what you'll realize is that most of your fears are unfounded and it's just emotional because you're not comfortable yet. Does that make sense? But you've got your great entry. And I'll say that 100 times in this room. You know where you're supposed to get in. Just let it play out. See what happens. I think you'll be surprised at how easy it is to nickel and dime yourself out of good stuff. Take care, Cav. And it's hard to hold a move. But look at that large chart. Oh my gosh, that's the best look ever. So we're just developing trust, man. Great job. I hope that's helpful. But I don't have a strategy for the NASDAQ. You'll get run over. So on the NASDAQ, here, watch this. So your large chart is a 13.2, Aaron. If you're going to do it, right? Which means these small triggers are devastatingly strong. When you get to the area, if you're going to trade the NASDAQ, a close on the correct side of those small triggers, just like TradingView, gives you the best chance of success. And it also gives you a place to put your stop. But on a 2 lot, that's going to be about a $350 stop. And if you're already a little tentative, that's gonna pucker. Awesome, Matt. Appreciate you being here. Reach out if you need help. You can send me a DM in here if you need to. Like if you come up on something, you're like, what the hell does this mean? I am available throughout the day. If I'm at my computer, I won't ignore you. Good stuff, Aaron. Good stuff, man. Wayne, I'll scroll up and find your charts. Hold on. Just kidding. I know right where they are. You right now, yeah. So, Matt, do you remember when you started high school? And it was scary as shit because everybody knew everything except you? That's learning to trade. You were a big deal by the time you got out of high school, and there was no fear. Just keep going through the reps, man. You'll get it. All right. So, Wayne, I don't think it was really strong-sided entry on this one. It looks like it was decidedly weak side and had been for the last 3 bars. Does that make sense? You did have room to trouble, but you are without a doubt on the weak side of those up triggers. Are you back? And you took the perfect momentum trade entry? I know. Oh, you 45? 37, 38. Where's this trade? I don't see any 45 entries over here. That's what got me. I see a long from 37, 39, and 37. I don't see a 45 entry. That's what got me. I get it, 50, 45. is all the way up here. That hasn't happened. 8:30, 8:12, 8 o'clock. I can't see your entry. Does that make sense? Like, this chart hasn't happened yet. This trades at 8:10. This chart's printing at 8 o'clock. And the entry from 50.45 hasn't happened. That's where I got confused. Then that was a good loss. If you were up here, strong side, up triggers, odds favorable, breaks, pulls back, that's a great momentum trade that just didn't work. You see how I got confused though? I'm looking at the 37 entry. It's my bad. I should have been looking up here where the market hasn't traded. It's a good loss. It's just a momentum trade that didn't work. Weak side of the triggers. Trend is up. Room to trouble. Price pulls back, closes above. Price pulls back, closes above. And just doesn't work. Stop may have been a little bit tight on that one, Wayne. I think I might have taken the same trade. Nope, that's not it. Hold on. I may have taken the exact same trade. Is that it? No, it was like an hour before. So you're relying on support, but the pivot low is over here. So the initial stop is below the pivot, no matter where you get in. And then it comes up and it fails. I guess you could put it there behind. Yeah, it just didn't work. Rules met. I'm trying to find something out of the ordinary, and there's really nothing. It just didn't work from the weak side. Makes sense. Everything says up. There's nothing in the way. It pulled back. It closed above. And you had the try and fail, and then they just went right back into failure mode. I can't find anything wrong with it. Yeah, welcome to my morning. I was down 700 before the day even started from mistakes. I went long when I should have gone short, and I accidentally deleted my stops. I took 2 kicks in the clackers without even really being in the right trade. I stopped for the day too. Told my wife, I was like, I'm on simulator. That's the market testing me. Yeah, that's usually the way it works. That's the market testing me. Do you believe in your plan enough to stop when things aren't going well? And I'm happy to announce that the answer was yes. The answer was yes. Yeah, I caught one earlier. I don't know where I think this was about an hour before you. That was on gold. I was like, oh, Wayne's going to be so proud. Look at me trading gold. Isn't it funny how the second you go to sim, everything changes back? Fortune goes up. Great job being able to stop though, Wayne. It's not always easy. Not always easy. All right, guys, that's my second hour. Cool. Take care, man. Crude oil's doing nothing. So I'm going to lose crude oil, and I'm going to take a minute, refill my water. I'll open up the NASDAQ. So we'll watch the NASDAQ dance a little bit too. When I come back, guys, it's the last hour. If you have questions, ask them. If you have comments, post them. If you have pictures, share them. Squeaky wheel gets the grease. So I'll see you in about 5. I am back. Aaron, did I miss a picture? I didn't mean to, I promise. But sometimes I do. Here we go. My bad. Thank you for telling me. Perfect trade. Large chart's perfect. Pull back to the area inside of triggers. Doesn't go where the market shouldn't. And there you go. Didn't move by quick enough. So, oh, it didn't stop you out, Aaron. It hit your target. Even better. That's it though, right? Great entries. So you were in at 34, you were out at 25. It's a $180 trade in a fraction of a second. In a fraction of a second, based on a great entry. Nicely done. I don't know what else I could tell you. It just doesn't happen much better than that. So one of the reasons, Aaron, that there's a quick profit in the beginning is it creates confidence, right? It gives you the idea that, man, I've got money in the bank. I'll just go break even. I don't care what happens. Whether it's $100 or $50 or whatever. I've got money in the bank, and now I've got the courage just to hold and see what it does. So I think you did it great, man. Once again, there's no doubt in my mind you understand the rules, which is awesome because 3 weeks ago, I wasn't sure that you had ever looked at them. So within 3 weeks, 100% turnaround perfect entries. Celebrate that victory. That's a good one. I bet it does. It does feel good, right? Confidence comes from the memory of success. There's a reason I give you guys the KISS plan. Like there's a total reason that the KISS plan is why. It's a great place to start. And it's because confidence comes from the memory of success. It does feel good to win. It really does. All right, so here's our NASDAQ. Can't go long, don't have a short, can't really go long, and they're just scrambling. We're in a holding pattern. Crude oil is going to get shut down because they're not doing anything. And I need to open up the S&P. So let's go look at TradingView while we do that. Support held, guys. There was your close above, pain in the butt. It did make it to the next area, and then it pulled back, and then it closed above, and it's in the process of making it to the next area. Triggers up, in transition. Just no areas to trade from. And if there's no area to trade from, there is no trade. Guys, what would you like to talk about? Now, I could sit here and try to make up a million lessons and just try and pull stuff out of my butt, but it's easier if you say, hey, Mark, this is what I'm working on. Why don't you help me with that? And I'll say, yes, I would love to. I would love to. Guys, one of the things a methodology does for us is there's a level of precision, and that precision reduces risk. Every day, my job after this is to watch people trade in the prop firm. And I see people leaving $2,000, $3,000, $4,000 of risk on their trades and losing these accounts. And guys, one of the great things about what we do, and Aaron, this is a good lesson on the management side. And I'll just pull up your most recent picture. And Victor, it looks like I owe you a read. Is when you're trading this methodology, right? When you're defining the trend, when you're identifying the fight, when you're entering at the fight, there's just no reason. Thank you, Jen. I'll do an F5 on it. It gives you this amazing confidence to where if for some reason, and guys, it happens, they push below all the goodness, isn't it easier to lose $300 than to put $3,000 worth of hope on a trade? There was a story There was a story, and I remember John telling me this story, and it was probably, I don't even know when. Um, I think it was, I don't know, maybe it was the 90s when the S&P fell. But there was a gentleman that went short in the S&P a lot. And when his short started to fail, he went short again at the next area. And when that short started to fail, he went short again at the next area. And when that short started to fail, he went short again at that next area. He went short again. He went short again. He went short again. And I think he was actually buying. But at the end of the day, on that particular day, he was out $12 million based on an opinion. And it's a scary story, and it's not at all an abnormal story. To trade opinions rather than rules, to hold giant stops when there's no reason to, because really we're better than that. You're better than that with the methodology. So um, stuff to think about. That's one of the advantages Nexgen gives you. Embrace it. Because if they can get to where the market shouldn't go, you probably don't want to be in that trade anyway. What are some common factors among successful prop firm accounts? Oh, like the people that I watch that are getting paid out, Phil? Cool. 2 to 4 contracts, not over leveraging. That's one of the biggest things that I see is the most consistent people aren't trading 17 contracts. They're trading 2 to 4 contracts. Consistent profits. Every trade isn't a home run. It doesn't have to be. Your account doesn't know how you get there. One of the biggest things I see is when I open up, and this is what's interesting to me. So if I open up, if I'm watching the semi-live or even the evaluations go, and these triggers are up the way they are right now, I will easily see 90% of the evaluations going short and losing money. See if I can find an example of that. Because sometimes it just floors me and I take a picture and I send it to my brother. Because this is my whole job. My whole job is to analyze, to look for people that we can follow, that we can copy. And it's amazing to me. It's astounding to me that when everything is going down, people are over leveraged going long, and it's such an avoidable thing, but it means that you don't get to be in the market all the time, right? So if I'm going to make that error, if I'm going to be like, man, I'm going to err on the side of with that 15-minute chart triggers, and everybody trades different, right? Not everybody trades NASDAQ, or not NASDAQ, but not everybody trades Nexgen. Let me F5 that, Jen. Tell me if it matches yours when I come back in. But I think over leveraged is one of the biggest things. You know what one of the other biggest things is, Phil? Not knowing the rules. I watched, and gosh, this was sad. A gentleman had $60,000 in a semi-live account and decided to trade news. And we're obligated. That's a violation. It's right there. Believing that you can go down $5, $6, $7,000 in your trade, and because the trade isn't closed out, it's not technically closed equity. That's irresponsible. You can't do that in the real world. I see that a lot too, where people think, well, as long as I'm in the trade, I can go down $20,000 and it doesn't matter. And I'm not sure. We've created the funding company to be as close to real as possible, right? You can't have a $5,000 account and they go, oh, it's supposed to be a margin call, but he hasn't closed out yet. Let's let him stay in and lose more money. Um, what else? I don't know. I see a lot of people doing great things though. I see people taking great trades on price action, on bar patterns. There's a million ways to do it. There really is. I think opinions. I see people that I know. No, it's different everywhere, Phil. People that put stipulations on the number of trades aren't trading rules. They don't believe in probabilities. They don't believe that trades will lose. If you tell yourself you can only take 4 trades, what happens if the first 3 are losers? I mean, assuming you don't hit your stop loss, right? Sometimes great trades fail. So even in the most consistent traders, you'll see somebody one day you may take 5 trades and hit your goal. The next day, it may take 25 trades to hit your goal because there's no follow through. I had a couple days like that last week, Phil, where I felt like I really overtraded, but when I went back, I didn't break my rules. I just couldn't get any follow through. Um, Commissions were outrageous. I had $300 in commissions one day. I was still up money, but oh my gosh, I couldn't get the market to go. So I don't know. That's probably, I think over leverage is probably one of the biggest challenges that I see. Um, and I want you guys to buy all the accounts, right? I really do. I want you to buy all the accounts. But ego is such a big part of trading. Um, if you can't pass 1, how are you going to pass 5, right? If you can't make it to payout status in 1, why are you trying to make $1 million in it? Get in. Learn how to get paid. That's the biggest thing. Learn how to get paid. Learn how to accept being paid instead of trying to make it all at once. I don't know. Miss Trina. Cool. Triggers are up. Weak side of the triggers. Room to trouble. Pull back to the area of support. Close above. Out of trouble because it's weak side. Trina, I can't find anything wrong with this. Now, was that your eval? Did you do that in your eval? Did you have the courage? It's the perfect trend trade. Good job. Did you see anything I didn't? I mean, it's textbook. It's beautiful. I could teach that every day. I could teach that every day. I do teach that every day. Victor, triggers up in transition, room to trouble, pulls back to the area. You do wait for the close above, and you're out of trouble. Nice job, Victor. Nice job. I like it. And then out at trouble. I like that even more. It's okay to get paid, right, Victor? Did anyone show up? I did this all the time. Has anyone ever been up $400 or $500 only to have it break even, or even worse, lose? I was up $500, and my opinion said it has to go further. Done it. I think everybody's done it. And Phil, you could probably put that in the list of things that I see people do. I've seen people up thousands and end up losing because they refuse to close the position. Well, it's ignorant is what it is. So I'll show you. I'm sorry, that's horrible. I shouldn't say that. But I'll show you what I mean. And I see this. I'm in a short trade, right? And I've decided the market needs to go to this fib. And my short trade comes down, right? And it tries to fail, and I'm like, I'm going to hold because it has to be that fib. And then they come down again, and it tries to fail, and I'm like, I'm going to hold because I believe it should be that fib. And then it keeps going up, and they're like, well, I've got resistance. They need to hit my fib. And then it fails again. And they're like, well, my target's down here. And I've seen people get in over here and lose it all after being up thousands. That's opinion, right? That's opinion. There's a book, which one is it? It's not Habits of Successful Traders. It is there you go. Something to read, guys. Emotion-free trading. And one of the comments is, take what the market is giving, not what you want. Give or take. I'm paraphrasing. Take what the market is giving, not what you think you deserve. Yeah, we all have, Victor. And I did notice that all of your trades are in the $300 area. Adds up, doesn't it? It adds up. Learn to get paid. That's the hardest lesson. It's the what if monster. I've created that. This fictitious monster, the what if monster. I know that I should get out here, but what if it breaks? I know I shouldn't take that trade from the wrong side of the triggers, but what if it bounces? I know there's no momentum to push this trade, but what if it goes anyway? I better stay in. I know I broke my rules, but what if it works? I better increase my stop. And the premise of what if will make some bad decisions. So I try to say, what do my rules say? If my rules say, this is my trade, I'm in it. Contentment. I think, yeah. Well, Phil, have you noticed that since you started taking solid entries, it's much easier to be content? Way easier. And that's it. And Aaron 11, that goes back to what we were talking. When you start to trust a little bit, you begin to accept losers, and you don't fight not losing so hard. It's just a part of it. It's a normal part of a positive equity curve. And it gets easier to sit tight. Oh my gosh, I have all the momentum. I've got 3 triggers through. I've got an area inside of triggers. And you start going, gosh, with this look, it's going to be hard for them to not go up. With an area inside of triggers, it's going to be tough for them to not bounce and go in that direction, right? With such low risk, yes, I'll take that every time. And now it's a clear path, and it's the tail end of momentum. And look at that, right at the very base, right at the bottom of the range. And if they come get me, that's my trade. Now this is NASDAQ, but it's still the same pattern, right? Still have a little bit of daylight. You can see it. I've cleared trouble. I haven't reached the next trouble. I've got one little box inside of an area. Whoops, get back over there. So the only thing we can't control is whether or not we get an entry. But does it fit the rules? Is this a pattern that I can prove wins more than it loses? Does it create an edge? Then that's it. Then it's my obligation to put an entry a couple ticks above that mid band, and whatever happens, happens. So here we go. Oh, man. And it's NASDAQ. They may just run me right over. Get down there, you son of a gun. That's why I typically go 2 ticks above. You guys want to, here, watch this. We'll pay for it and put our stop in the right place. Whoops. And then they came and got us anyway. And now the only option is we either get stopped out or we don't, right? It either goes or it doesn't. And Aaron, this is why the NASDAQ's a little different. It needs more breathing room than 4 or 5 ticks. And see how fighting those small triggers, they're trying to get through? If they get through, there's nothing in the way. If they don't get through, we're going to take the loss. But Aaron, we're not going to touch it, right? We're just going to see what the NASDAQ wants to do. We can't control that. We're not going to look at ticks. We're not going to try and impose our will on the market. We're just going to sit here and see if they want to go up. Now, guys, in my personal trading plan, I don't enter at areas. I force a reversal bar on the NASDAQ. So my entry would say, with this look, with this area, if I get a reversal bar in the direction of my trade, because I don't want to fight these small triggers, that's a little NASDAQ trick for you NinjaTrader NASDAQ users. So we'll see if they get us. Drive you nuts watching those ticks, won't it? The idea on the NASDAQ is this is a 13.2, Aaron. This is not a 5.1. This is a big honking chart. And when you're fighting those small triggers love to win. So my plan says get to the other side of the triggers and at least give yourself a chance. Because if you open up the NASDAQ, well, not any good examples here. If you're looking for the short, small triggers can run you over. If you're looking for the long, small triggers can run you over. That's one of the tricks for the NASDAQ. It doesn't guarantee a winner, but it puts you in on the good side of those triggers. It keeps you from fighting that immediate strength. But that's unique to the NASDAQ. And if I get a third divergence here, guys, it's party over. There it is. So I take my exit, I take my loser. But Aaron, yeah, that's one of the tricks. It gives you a fighting chance. Did you notice that it didn't even try to go up until it got to the other side of those triggers? That's a little NASDAQ specific. Now, if your rules aren't met, it doesn't do a bit of good, right? But if your rules are met, that little later entry, it gives you a place for your stop. It gets you in on the good side of the triggers, and it does. It gives you a fighting chance. That is specific to the NASDAQ. That is not an S&P or a crude oil thing. Guys, we got about 20 minutes. Andy, how we doing? Papa, Sergio, Muser, Aaron, Phil, Morgan, Jeffrey, Miss Donna, Collie, Dave, Mark, Boaz, Zahir. Good to see you, Zahir. George, Vance, Ryan, RC, Raymond, Jen, Robert, Mark, 452, Badger Toe, smaller than a camel's. Chariot, Victor, Z Robot, Trina, Kindle, Gab, Mighty Max, Kokofi, Jim, Mike, Joe, Joel. Anything? Anything I can do for you guys? I like that, Z Robot. Every day's a good day. They didn't go anywhere. It happens. Keep on doing what you're doing. Well, I run out of stuff to say after a while. How to fibbed develop... I think they've given up, Boaz. I don't know. I don't know anything about it. That's John working with the programmers, but I really think that it's just not something that's going to happen, is my guess. Or they haven't figured out how yet. But you know what you can do, though, is you can look at NinjaTrader and find a fib and go, there's my fib, right? And if you do the key areas on a big chart, it gives you something to look at for sure. Or you can do this. Just put them next to each other, right? I can see these key areas. I can also see these key areas. So if you're going to use both of them, you can say, I'm only going to take a trade if everything lines up together. If it's perfect on both charts or both platforms. Me personally, I will always lean on whichever platform gives me the entry, so I can't do that. That has been a recipe for disaster for me. Joe, I don't know if you were here this morning. Every trade that you posted was perfect, and I don't think any of them worked. And crude oil was having some challenges, but you got nothing but gold stars on what you did. Just didn't work. Uh-oh. Triggers up, room to trouble, pull back to the area, close above. There's my stop loss. Not a lot of room to the 1-to-1s. You want to see if they make it to the HVA? Does it fit? First its triggers up. Nothing in the way. Pull back to the area. Close above. Do you see how they hit those 1-to-1s though? That was my first sign of trouble. Not nearly enough room, but that's your entry pattern. Watch this. We'll just go break even behind the 1-to-1s. And let's see if they want to run. Once you figure out the entries, you're good. No, there wasn't enough area there. So if you do take it, get to break even, right? Take 7 of them off. Right at an HVA. Boom, there we go. Money in the bank, nothing to lose. Large charts winning. Hiding behind everything. Guys, that's where you're going to end up. But that's it. It's a trend trade. It was tight. The entry was 46. The 1-to-1s were 50. It was $80 worth of profit per contract. I've got nothing to lose. I've got money in the bank. I've got nothing but room above me. So now I just watch it. That was a pretty easy one though. And in a market that has been up since 9:15 in the morning, I love that look. That's a sexy look. Take and manage. All right. Nothing to lose, right? Here, watch this. We'll do this. Since we already got paid on 7, let's just see if the large chart wins. Let's see if they want to go to the outer band. We've got 3 contracts left. We just hit the next area that could create a bounce, right? From the transition weak side, we might already be out. So now we're like, oh, that could shut things down. Oh, and it is. And it is fast, right? Maybe I'll get rid of 2 more and I'll leave 1 runner on. And let's just see how long it wants to go. You have to have a management plan. But from the weak transition, all of these areas could create trouble. So what's happened since we've entered? The small triggers are now up and strong, immediate strength. I'm above the 1-to-1s. I'm above the HVA. And I'm right at trouble, right? And there we go. Outer band's a little bit further. And we're waiting to see what the reaction is right at this high. So I might say, if I get a close below the small triggers, that's where small chart reversals come from. I'll exit my position. If that doesn't happen, I've got nothing to lose. Are you guys following me? And hell, we could just take this one forever, right? We could put it as far out as we want and say, I'm just going to hold the runner until they give me a close below the small triggers. There's some 1-to-1s off in the distance. Do I sound stressed to anybody? Do I sound nervous about my future? I feel like I'm pretty calm. I know what's working for me. I know what's working against me. I know where my entry comes from. I've got absolutely nothing to lose. And I've got a defined recipe, 49 seconds, until I know whether or not that's going to close below small triggers, which means if I get a giant bar that goes all the way down to 48, guess what? I didn't make anything on the last contract. Who cares? I made money on 9 of them. 30 seconds to go. How'd we do on the first couple? 1280? 1280 on the first couple. All right, 16 seconds, guys. 12 seconds. Am I going to have to close out? 8, 7, 6, 5, 4. Whoa, I'm glad I didn't try to anticipate it. See the timer right there? 57, 56. Do you see it, 10K? So if you right click here and go, or click here and go to more settings. There is, maybe it's on the symbol, status line. Nope, scales and lines. There we go, right there. On scales and lines, countdown to bar close. And look at that, guys. Because I knew that the only way I would exit is with a reversal bar or a close below. And now I got a seller's tried and failed. That's my new stop. So Boaz, if you're in 2 contracts, here, watch. Let me add on 2 more contracts. So I'm in 3 contracts. I have to reduce my count and then right click and I can sell one off. So put in a limit order to sell. Get up there. There it is. And if it hits that limit order, there we go, in an uptrend, I love it. It'll pull that contract off. It should, come on. There we go. And it'll adjust. So what you'll do is you'll take them off. Look at that, guys. We're still in. We may have to put that further away. So all you have to do, whatever you're in, Boaz, if you're in 2, adjust it to 1. And there's 2 ways. You could have a limit order, so we could take 1 more off if they make it to the 1-to-1s. Or we could even just hit sell, which is the opposite of buy. Watch this. And it'll take 1 out. And now we're down to 1 contract. And since we've already reached targets, I'm just going to lock in on the last one. Because whoever got mad about making $338.83 on the perfect trend trade? 15-minute zones might not be printing. What's up, Matafeka? Oh, yeah, look at that. 401 target, huh, Phil? 401 target. Man, that's good to know. Sad tilted. Sorry to hear that. So, guys, large chart target is 401. We've already taken, what, 11 out of 12 off. We've hit the 1-to-1s. We have nothing to lose. Where's my big chart target? And large chart areas are used for targets. So that's where we need to get to hit that large chart target. That's a pretty good trade going on, isn't it? Pull back to the area. There was a zone here, 10K. Close above the small triggers. The perfect trend trade entry. We got paid at the high. We added on. We got paid some more. And now we're looking for the large chart. But that's it. It was a pullback, not 34.5 bar 10K. That's Renko. When the minute bar finished above the small triggers, and I had an area there. Sometimes you got to take a sacrifice for baby back ribs, Victor. And now, what's the worst case, guys? We add another 828 to the account, or we only get 338 of it. I still haven't gotten a close below the small triggers. But I've hit enough up here that I feel like a bounce is pretty good. We were in at 47.75. Our close was at 36.75. We got slipped a point. So that's where we entered. See how I got behind that HVA line? That was the highest concentration of buyers in that bar. That's a little stop trick, guys. So we got in, we got out, we took more profits, we added on again to give a split contracts lesson. We took those off up here at outer bands, and now we're just looking for the runner. Well, if it pulls back to the green area, Victor, you're right into the outer bands. Sometimes you just miss the move. And watch that. That looks better, doesn't it? Now it looks like we have more room. And it may, we'll see. Those 1-to-1s are creating some problems, but what do my 1-minute triggers say? Odds favorable, momentum up. What do you mean size up the wicks? Like make them thicker? Hell, I don't know. Let's find out. Double click. Wick. I got colors. It doesn't say anything about the thickness though. So they're just fighting right in between, right? Yeah, I don't know, 10K. You know, we've got this cool thing called the internet. Thick wick highlight. So here you go. Apparently you have to get an indicator. I don't know if they're free or not, but that might be worth looking into for you. There you go, 10K. Oops, I don't know why I gave you the picture. Here, let me just give you the link to the information. And then Joel, you just have to go to Chart Prime and buy them. Oh, there we go. It gave you the link too. So just go to Chart Prime. If you want them, all you got to do is buy them. Whoa, strong triggers seem to be working, guys. Look at that. Go. Go, 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 go. Still haven't gotten a reversal bar close below either. That's pretty awesome. Been nothing but up bars. I wish Matt were here for this one. It all started with the perfect trend trade. And we're just still going. Should have been in my live account for this one. Crude oils. I shut down crude oil. Just stop watching it. It tends to die after 11 a.m. Are they going to get us, guys? Here, watch this. Now I've got rules met for a momentum trade off the 1-to-1s. So if the 1-to-1s don't hold on a push down, it's going lower anyway. I don't have to give that much back. We're so close. Go, go, go. Does it make sense what we did, everybody? First it was up. Transition side of the triggers. Pull back to the area with a close above. That's our entry. And then management is where you make money. Partial profits, right? More partial profits. Reading your indicators. Do you still have the advantage? If I get a pullback here, what's the most likely entry? Well, since the smalls are inside of the large, I don't even have a momentum trade entry anymore, which means I'm just going to tighten it up. And if it closes below, I'm out. And if it hits my target, I'm out. But so far on this little run, guys, we've already made 12, 15, I don't know, 17, $1,800. It was a 10 lot, and then bingo, right to trouble. Can I drop the mic and in the room now? Once you learn the trend trade, guys, once you believe in your entries, it opens the door for everything else. It's about that time, isn't it? I didn't do anything special. I just took a trend trade. And then I trusted it. It never said get out, did it? It never said get out. It never told me things were changing. And it just kept going. How hard is it to sit through a trade like that when it's real money? It's tough sometimes. And look at the reaction. My first big ugly bar is off the large chart resistance. That's my first big ugly bar. How cool is that? Understanding where the market is likely to go. So guys, if you can't do this yet, it's okay. You'll get there. Practice, study, ask questions. There's a way to get to where you want to be. But I mean, that is freaking perfect. So watch this. And then my zone came back, so it's even better. triggers up, transition, room to trouble, large charts met, pull back to area, close on correct side of smalls. Have fun. Welcome to Nexgen. Trend, fight, resume. That's all it is. Trend, fight, resume. Trend, fight, resume. Guys, go have an amazing afternoon.